Hey everyone, and welcome back for another deep dive. We're going to be tackling some seriously interesting market trends today.
Yeah, sounds fun.
And we've got some data that points to the S&P 500 potentially making a historic move. So we'll be exploring what that means for all of us.
Okay, so should we start with this S&P 500 thing? What's got everyone so excited?
Yeah, I mean, it sounds like we're on the verge of something big.
Well, you see, the S&P 500 is basically like a snapshot of how 500 of the largest U.S. companies are doing.
Right.
And right now, it's on track for a second year in a row with returns over 20%.
Really?
Yeah. And to put that into perspective, that kind of performance has only happened 8 times since 1950.
Wow. 8 times since 1950. That's pretty rare.
It is.
So what's driving this incredible run?
Well, it's a bunch of factors all coming together at the same time.
Okay.
You know, we've got strong corporate earnings, we've got all this technological innovation, and overall a pretty positive economic outlook. All these things together create this sense of optimism in the market,
Yeah.
which then translates into higher stock prices.
So it sounds like a classic bull market scenario.
It does.
But this kind of growth can't go on forever, right?
Yeah.
What are the downsides to this bull market running so strong for so long?
Well, you're right to be a little cautious.
Okay.
One risk is we could see an overvaluation.
What does that mean?
Well, when stock prices increase too fast, they can actually end up exceeding the real underlying value of the companies.
Oh, so they're not really worth that much.
Exactly. It creates this bubble that could burst if investors start losing confidence.
So it's kind of like a game of musical chairs where everyone's rushing for a seat when the music stops.
Exactly. And when that happens, the market can experience what we call a correction, which means prices drop significantly and they drop fast.
Okay, that doesn't sound like a good time.
Not really.
So how can investors navigate this potential volatility? Is it just a guessing game?
Well, we can't predict the future, but there are ways to manage risk and make more informed decisions.
Okay.
And one of the key things to consider are interest rates.
Right. Interest rates. I feel like everybody's talking about those cuts potentially coming in 2025.
Yeah.
So how would those cuts impact the market, especially if we're already in this strong bull market?
Well, generally, lower interest rates actually stimulate economic growth
Okay.
because they make it cheaper for businesses to borrow money.
Oh, I see.
And that can then lead to more investment and expansion,
Makes sense.
which in turn can boost those corporate profits and drive up stock prices even higher.
So it's like a win-win. Cheaper borrowing for companies, which leads to higher profits and then potentially even better returns for investors.
Yeah, in a way.
But is it really that simple?
There are always complexities.
I bet.
Yeah. One thing to think about is the speed of those interest rate cuts. It looks like they might be implemented more gradually than people first thought.
That makes sense. I've been seeing a lot of conflicting reports about that.
Yeah.
So what's causing this more cautious approach?
Well, there are two main things influencing the Federal Reserve's decision-making. One is inflation,
Okay.
and the other is economic growth.
Got it.
They're trying to find a balance between supporting the economy while also keeping inflation under control.
I see.
So if they cut rates too aggressively, it could actually lead to even higher inflation, which would end up hurting the economy in the long run.
So it's all about finding that sweet spot.
Yeah, it is.
But I'm curious how stocks have historically reacted to these rate cuts.
Oh, okay.
I mean, we hear all these predictions, but what does the beta actually tell us?
So historically, when the economy is doing okay and we're not in a recession, stocks have actually gone up by an average of 17% in the year after a rate cut.
17%.
Yep.
That's a pretty significant jump.
It is.
But is that typical or is it just a historical anomaly? What about the times when it didn't work out so well?
Well, you're right. It's important to remember that past performance doesn't guarantee anything for the future. And yeah, there have been times when those rate cuts didn't lead to huge gains in the stock market.
No.
For example, if there's high inflation or a lot of economic uncertainty, the market's reaction to rate cuts can be much smaller.
So it's not a sure thing.
It's not.
It sounds like context is really important when it comes to interpreting these trends.
It is understanding the bigger economic picture and recognizing that there are always a bunch of different factors at play.
Absolutely. Okay. So we've talked about the S&P 500 and its record-breaking run.
Yeah.
We've talked about the potential impact of interest rate cuts. But there's another big thing shaping the market that I want to talk about. The rise of artificial intelligence.
Oh, yeah. AI. It's changing everything around us.
It seems like it. Like there's a new headline every day about how AI is going to revolutionize this industry or that industry.
Right.
But I'm still a little unclear on how it's specifically affecting the stock market.
Well, AI is being used in a ton of different ways. For example, some companies are using AI algorithms to analyze huge amounts of data, identify trends, and even make trading decisions. Wow. This could make the market more efficient, but it also brings up some interesting questions.
Like what? What are the potential benefits and risks of AI taking on this bigger role in the market?
Well, on the one hand, AI can process information way faster and more efficiently than humans.
Right.
So that can lead to more accurate predictions and potentially better returns for investors.
Yeah, that makes sense. But
Yep.
what about the risks?
Well, there are concerns about transparency and accountability. Like if an AI system makes a bad trade, who's responsible?
That's a great question.
Yeah,
Seems like we're in uncharted territory here.
it does a bit.
And with all this talk of AI and its potential impact, I wonder if it's already starting to change how investors behave.
It's a fascinating question.
It is.
Are investors starting to rely more on these AI-driven insights? Are they maybe overlooking more traditional ways of analyzing things? These are all things that researchers are starting to look into.
It seems like we're on the edge of a major shift in how we think about investing.
We are, and like any new technology, there will be opportunities and challenges.
For sure. Well, this has been an incredibly insightful deep dive so
Yeah,
far.
yeah.
We've talked about the S&P 500's impressive performance, the details of interest rates, and the growing influence of AI.
It's amazing how all these different pieces come together to create this dynamic market landscape.
It is. And it seems like there's always something new to discover and explore. But before we move on, I want to take a moment and ask you, our listener, a question.
Okay.
What stood out to you the most in this discussion? What really got you thinking?
It's always good to reflect on how these trends might affect your own financial decisions.
Absolutely. So take a moment to think about everything we've discussed, and we'll be right back to continue our deep dive into the forces shaping the market.
Sounds good.
Okay, we're back and ready to keep going. Before we took a moment, we were talking about AI and its growing influence in the market.
Yeah, it's a topic that seems to raise more questions than answers.
For sure. But that's what makes it so interesting, right?
It's true. AI is constantly changing, and its impact on the market is still kind of unfolding. It's like watching a brand new ecosystem develop right in front of us.
And that makes me think about how interconnected everything is in the market.
Right.
Like a change in one area can have a ripple effect and impact other things that seem totally unrelated.
Exactly. The market isn't just a bunch of separate stocks.
Yeah.
It's this really complex web of relationships and influences.
That's a great way to put it. And it actually brings us to another really important part of the market, sector performance.
Okay.
So we've talked about how strong the S&P 500 is overall, but what's happening beneath the surface? Are all sectors doing equally well?
That's where things get really interesting. While the overall market is up, we're seeing some differences in how various sectors are performing.
So it's not like everyone's going up at the same rate.
Exactly. And understanding those differences can be super valuable for investors.
Okay, so let's break this down. Which sectors are in the lead right now and what's driving their success?
Well, technology is still a major force.
Right.
We've seen huge growth in areas like AI, cloud computing, and cybersecurity. And all these advancements aren't just changing how we live and work, but they're also creating amazing opportunities for investors.
Makes sense. It feels like AI is everywhere these days, from self-driving cars to personalized medicine.
I know, it's wild.
So it's not surprising that it's having such a big impact on financial markets, too.
Yeah, for sure. And it's not just AI either.
Okay.
The healthcare sector is also growing really strongly, driven by things like the aging population and the development of all these new treatments.
Healthcare is definitely a sector to watch,
Yeah,
especially as people are living longer.
definitely.
But what about some of the more traditional sectors, like energy and manufacturing? How are they doing in this current market?
Those sectors are going through some unique challenges.
Okay.
So the energy sector, for example, has been hit by the ups and downs of oil prices
Yeah.
and the whole shift towards renewable energy sources.
Right.
Then you've got manufacturing, which is dealing with problems in the global supply chain
Yeah.
and rising labor costs.
So it's kind of a mixed bag for them.
Yeah, it is. It means investors need to be more careful and strategic with their choices.
I see. So it's not enough to just pick stocks anymore. You have to really understand the dynamics of each sector.
Exactly.
Yeah.
You need to be able to identify the companies that are in the best position to do well, given the current conditions.
That makes a lot of sense.
Yeah.
We've talked a lot about what's happening in the U.S. market, but the global economy is so interconnected these days. So what are some of the international factors that investors should be paying attention to?
Well, globalization has basically created this web where we all depend on each other.
Right.
So what happens in one part of the world can affect everyone else. For instance, you've got things like geopolitical tensions, trade disputes, and those currency fluctuations. They can all have an impact on how investments perform, no matter where those investments are based.
It's like a giant chess game where every move has these consequences that reach far beyond the board.
That's a great way to think about it. And it highlights why it's so important to stay up to date on what's happening globally and to really understand how those events might influence the markets.
So it's not just about picking the right stocks.
Yeah.
It's about understanding the entire world.
It is.
That feels a little overwhelming for someone like me.
I get it. It can be a lot to take in. There's so much information out there. But there are resources that can help investors make sense of it all.
Okay.
Like financial advisors, market analysts, and reliable news sources can all offer valuable guidance.
That's helpful to know. We've talked about how different sectors are performing, and we've looked at those global influences.
Yeah.
But there's one more piece of the puzzle that I want to explore: investor sentiment. How are people feeling about the market right now? Are they optimistic, cautious, or somewhere in between?
Investor sentiment is really powerful, and it can often be a self-fulfilling prophecy.
We mean?
Well, when investors are feeling good, they're more likely to buy stocks, which drives prices up.
Oh, I see.
But when they get scared, they tend to sell, and that can cause the market to go down.
So it's like this giant mood swing that affects the entire market.
Exactly. And right now, sentiment is kind of mixed.
Really?
Yeah. On one hand, you've got all the positive momentum of the S&P 500 and the potential for the economy to keep growing.
Right.
But then on the other hand, there are concerns about inflation and interest rates and all the geopolitical instability in the world.
So it's like a tug of war.
Yeah, it is. And all this uncertainty is showing up in how volatile the market is.
Oh, okay.
We've seen some big swings lately, which suggests that investors are still trying to figure out what's going to happen next.
So how can investors stay grounded when the market's giving off all these mixed signals?
Well, one of the most important things is to focus on the long term.
Okay.
Those market fluctuations are going to happen, but over time, the market tends to reward companies that have good fundamentals and keep growing steadily.
So don't panic and just ride out the storm.
Basically, yeah. But it's also really important to diversify your portfolio.
Right. Don't put all your eggs in one basket.
Exactly. Spreading out your investments across different types of assets, different sectors, and different parts of the world can help you manage the risk.
That makes sense. Diversification is always a smart move.
Yeah.
Now, as we wrap up this part of our deep dive, I want to circle back to something we touched on earlier: the power of knowledge.
Yeah.
We've gone over some pretty complicated stuff today, but I hope it's clear that understanding these forces can really help you make better decisions about your investments.
I agree. Knowledge is power, especially when it comes to the financial markets.
So what's one key takeaway that you hope our listeners will remember from this conversation?
I'd say this: the market is always changing. New trends pop up, old patterns shift, and things happen that nobody could have predicted.
Yeah.
The key is to stay informed, be ready to adapt, and never stop learning.
Those are some wise words.
Yeah.
And on that note, let's pause for a second so you, our listener, can process all this information. We'll be right back to finish up this episode of The Deep Dive and leave you with some final things to think about. All right, we're back for the final part of our deep dive into these market trends.
It's been quite a journey.
Yeah, we've covered a lot, from the S&P 500's incredible performance
Right.
to those interest rate cuts and the rise of AI.
Uh-huh.
But like with any exploration, there's always more to discover.
That's true.
So it brings us to this question that I think a lot of investors are wondering about.
Come on.
What does the future hold? I mean, we've analyzed the past, we've looked at the present,
Right.
but how can we even begin to predict what's next?
Well, predicting the future is always a bit of a gamble, especially in the financial markets.
Yeah, that's true.
But by understanding the trends and the forces that are shaping things,
Okay.
we can at least start to make some educated guesses.
So informed speculation.
Exactly. It's not about having a crystal ball or anything.
Right.
It's about using what we know to assess those probabilities and make educated guesses about what might happen.
I like that. So what if we play a little game of what if? What are some of the key scenarios that investors should be thinking about right now?
Okay, well, one scenario is that this bull market just keeps going.
Okay.
If the economy stays strong, if those interest rates stay low,
Uh-huh.
and if those corporate earnings keep growing,
Yeah.
we could see the S&P 500 just keep climbing.
That would make a lot of people happy.
It would.
But what about the other side of that? What if things don't go so well?
Well, a market correction is always possible.
Right. Where those prices drop significantly.
Yeah, and a bunch of different things could trigger that.
Like what?
Well, you could have rising inflation,
Yes.
a slowdown in economic growth, or even some kind of geopolitical event.
Right. So those are like the two main scenarios, continued growth or a correction.
Yeah,
But you also mentioned wild cards.
I did.
What are some of those less predictable things that could really shake things up?
Well, one wild card is the impact of AI.
Right, AI.
As it becomes more and more sophisticated and integrated into different industries, it could have some consequences for the market that we don't even see coming.
AI is such a game changer.
It is.
It's hard to imagine how it will change everything, let alone just the stock market.
It's true.
Yeah.
Another wild card is the political landscape.
Oh, yeah. Elections and policies and global conflicts.
Exactly. All of that can create uncertainty and volatility in the markets.
It seems like there's so much to pay attention to.
There is.
So how can investors even begin to prepare for all of this?
Well, one really important strategy is to stay informed
Okay.
and be flexible. Don't get stuck on one outcome or become complacent.
Right.
Be ready to adjust your portfolio and your strategy as things change.
I like that flexibility seems super important in a world that's constantly changing.
It is. Another important thing is to manage your risk.
Okay, how do you do that?
Don't invest more than you can afford to lose.
Right.
And make sure your portfolio is diversified across different types of assets.
Okay, like we talked about before.
Exactly. Different sectors, different regions of the world.
Diversification. Now, as we wrap up this whole deep dive,
Yeah.
I want to leave our listeners with one final thought.
Okay.
We've talked about all these trends and data and strategies,
Mm-hmm.
but investing isn't just about numbers.
Right.
It's about people.
You're absolutely right.
Behind every single stock, there's a company, there are people working. There's a story.
There is.
And understanding those stories, the human element behind all the financial data
Yeah.
can actually give you really valuable insights.
I agree. It's about connecting with the purpose and the passion behind these companies.
Exactly. So as you continue on your investing journey, remember to look beyond the numbers and connect with those human stories that are shaping the market.
And never stop learning and exploring.
That's so important.
And be willing to challenge your own assumptions.
Yeah.
The world of finance is full of surprises, and that's what makes it so exciting.
Absolutely. Well, thank you for joining us on this deep dive into the market.
It was my pleasure.
We hope you've learned something new and are feeling inspired to keep exploring the financial world.
Until next time.
Happy investing, everyone.